Good afternoon, everyone. My name is Humberto Barroso. I'm a licensed mortgage broker over here with the team at Elite Lending. Today we'll be talking about what we think the economical real estate forecast is looking like for the year of 2026. We are going to be talking about mortgage rates, home prices and inventory, inflation, and what that all means for you, the borrower. In 2026, we're expecting things to rebalance and recover. Over the last couple years, we've had shaky rates, low inventories, home prices surge up, and a bunch of stuff going on in the economy that doesn't necessarily help home buyers or investors. This year, we're expecting things to be more predictable. With the environment ahead, we're expecting rates to come down a little bit, home prices to hold steady, and it be an actually great year to purchase real estate. Let's take a deeper look and see what the numbers are telling us for those looking to invest in 2026. Before I continue, make sure you like, comment, subscribe, and all that other good stuff. Why 2026 is expected to be different. This year, we think that rates should begin to stabilize after all the economic policies that were put in place. We have a lot of big banks talking about things finally slowing down as far as inflation. Over the last couple of years, we've had big hikes in cost of labor, cost of food, cost of electricity. All these things have caused inflation to shoot up over the last couple of years. But this year, they expect it to be different. As far as rates, we are expecting rates to come down over the next 12 months or so, steadily, right? We're not going to see any huge dips like we've seen in the past. There's no 2 or 3%, but things should be coming down and get into a more manageable area for a lot of first-time home buyers and investors. The higher the rate, the harder it is for people to lend money, for people to want to take out mortgage rates at the higher rate. We have our fingers crossed and hoping that the 30-year finally dips under that 6%, which would gradually help all those first-time home buyers sitting on the sidelines waiting for those better rates. As far as improvements in inventory, we are expecting things to get much better. Over the last couple of years, we did have a slowdown because of COVID, but things are finally on what we call on pace. We have a lot of builders taking care of new construction needs and even some of those in the higher end markets. So buyers will be able to take advantage of these newer homes sitting there. As far as older homes, people are starting to move out and move along without holding on to that 2 or 3% interest rate that they may have gotten a couple of years ago. People are starting to upgrade, families are getting bigger, those steps are being taken. So the inventory of older homes for those looking for those types of homes should also increase. Home values and appreciation. For 2026, we're expecting things to be a little bit slower than what we've seen in the last couple of years as far as home appreciation, but it should be slow and steady. Typically speaking, home values increase about 3 to 5% every year, give or take, some years better than others. But for the most part, it should be slow and steady and not those big jumps or falls we've seen in the last couple of years. As far as policy shifts and things going on in our economy, things will always be shaky, and it's obviously we have to take a lot of things into consideration. The cost of goods imported and all the other things that we have going on. Whatever side you may sit on, it's important to know that things are finally looking to be better. Cost of imported goods should lower, and the cost of overall goods should also lower, which, of course, for those looking to purchase a home, it's very important. Let's start with the question I get every single day. What are mortgage rates going to do? Across the board, we have many banks and economic research groups telling us all the same thing. Rates should hover a little bit above 6% for most of the year, with some aggressive banks telling us we may see a dip under 6%. That being said, it's going to be a slow and gradual fall, as opposed to what many buyers are hoping for, a drastic change. Nonetheless, this is going to increase buying power for buyers, first-time home buyers, any investor, or any person looking to construct real estate in 2026. It may not be the major shifts we are hoping for, but it should bring necessary ease to a market we're in. According to Consumer Affairs, most markets have us hovering between a 6% average interest rate to about 6.3 on the conventional side. Realtor.com has us at an average forecast at about 6.3 for all of 2026. A lot of economists are wary for rate drops and what is needed in our economy, but there's a lot of factors they have to take into consideration. They have a lot of things they have to take into consideration, such as inflation trends, the bond market, wage numbers, and outside economical factors going on. As we record this video, the Fed is currently sitting at a 6.16% on the 30-year fixed rate. give or take what we're looking at and what is being forecasted for the current year. Now you may be asking, why are rates not going down faster? What's going on? Why are they hovering and why are they sticky around here? I want that 5%, right? Currently, inflation is still a lot higher than many would like it to be, while unemployment numbers have been uneasy for the last couple months. Once we see stronger economic patterns and the Federal Reserves like what they're seeing, it's more than likely we're going to see those more aggressive rate cuts in coming years. Bottom line, expect rates to hover around low 6%, and if you're very lucky, you may see some high 5s. Obviously, those looking to get into the market, the stronger your application is, the better it's always going to be. Remember to keep those credit scores up and those liabilities low to get access to the best rates on the market. Home prices and inventory. Many are predicting home prices to have a steady increase this year, which for a lot of home buyers, that's a good thing. Now, steady back to normal times. 1 to 3% is what's being predicted for 2026. Currently, Home 365 has appreciation estimated about 1 to 3%. We have Realtor.com forecasting about a 2.2% increase on home values. And we have USA Today ranging all the way from a 0.3% depreciation to all the way a 4% increase in some markets. Give or take, market consensus is sitting around 2 to 3%, which is very, very good for those who currently own homes and investment properties. Remember, it's not timing the market, it's time in the market. As far as inventory, like I said early on in the video, things are taking a turn for the better. We've had a lot of construction over the last couple years with a lot of construction companies taking advantage and creating new development for first-time home buyers and even some of those in the luxury sector. Realtor.com is forecasting about an 8.9% increase in inventory, while Housing Wire has it a 10.5%. What does this mean for you, the home buyer? Buyers have now more choices than ever in the last 5 years. This also creates less urgency for those trying to get into the market. What does that mean? That means you have more negotiating power, you can negotiate more credits, and better deals for those buying. You don't have to feel stuck like you're in a rush to get into a home. You want to make the right investment because at the end of the day, you have lots of money going towards these properties and want to make sure that you're going in cool, calm, and collected. In other good news, wage growth is outpacing home prices, which means there's more affordability than there has been in the last couple of years. Again, emphasis for you guys, the first-time home buyer. If you guys have been sitting on the sidelines for the last couple of years, now more than ever is time to take action. With the rate drops increasing and the inventories opening up, I cannot emphasize the amount of negotiating power you guys currently hold. There has not been a better time in the last 5 years to purchase real estate. Inflation and the economy in 2026. As for our wonderful friend inflation, we are expecting him to go down this year. Lots of markets are predicting a 2% drop for the US, which should help elevate some of those costs, whether it be gas, electrical, food, and of course, real estate purchases. As for those tricky tariffs that everyone's talking about, they of course will affect all markets, including ours, but it shouldn't be that big of a deal. Obviously, at the time of recording this, we're hoping that they currently stay in place and do what they are supposed to do and help alleviate some of those import and export costs currently going on. For all of us who are looking for those policy rate cuts, we do have some good news. Our Federal Reserve President, Jerome Powell, will be stepping down at some point this year, with a new one being appointed. Trump has spoken very aggressively about rate cuts, so for those of us in the market, we're hoping that it trends to be that. 3 countries with higher policy rates, US, the UK, and Norway, are all expected to make cuts globally. Goldman Sachs has the Federal Reserve rates dropping up at least 50 basis points. As far as jobs, we're expecting to see slower hiring processes and people holding their jobs for longer. GDP growth is expected to be 2% over the following year. What does this all mean for you, the homebuyer? This year, more than ever, you're going to have flexibility and negotiating power when it comes to purchasing. We're going to see homes being negotiated, a lot of seller credits, and rates coming down, allowing you to finally get into that first-time homebuyer or upgrade that home you've always been looking at. As far as investors, more opportunity than ever. We have a lot of sellers looking to get off the market and deals being negotiated. If you're looking to grow your real estate portfolio, now is the time to sit down, look at numbers, and discuss. And lastly, if you're a homeowner, you should be happy with the continued growth increase in your home's value, and maybe you may even consider taking a home equity line of credit to access some of that equity and further continue to grow your real estate portfolio. And with that being said, I'm sure all of that is going to fly right over your head. If we're being honest, it's a lot of information and you're going to hear things from all over the place. So before you go sit down with Uncle Johnny, look up all the details I put in this video and come to conclusions yourself. My best recommendation to you is to always sit down with professionals and find out where you are currently at and what you want to achieve. It's impossible to predict the market, impossible to know exactly where our economy will be headed in 2026. But if buying real estate is a goal of yours, we are here to help. With the help of the team over here at Elite, we take pride in assisting all home purchases with their financial needs. From first-time home buyers to investors, we like to take care of it all. And if you have any questions, you are confused about anything being said, feel free to reach out. And if any of that information was useful for you, please make sure to like, comment, and subscribe. We are putting out content like this every single week to help you guys throughout the process. So of course, the best way to stay up to date is to make sure you subscribe. Again, guys, my name is Humberto. Thank you guys for watching.